The month of August is coming to an end and we're getting close to the end of the month. That means the year is getting to a close. Probably a good time to start taking stock of what we've been doing in 2023. But let's do business first. And 55 minutes of current and relevant business conversations we're having here on Business Morning. I'm Ini John Mekwa. You're welcome. We start off with oil prices. It extended gains on Wednesday after industry data showed a large draw in crude inventories in the United States, which is the world's biggest fuel consumer, and as concerns about a hurricane in the Gulf of Mexico kept investors on edge. Brent crude futures for October climbed 31 cents to $85.80 a barrel. The October contract expires on Thursday, and the more active November contract was at $85.23 a barrel, up 32 cents. U.S. West Texas Intermediate crude futures gained 38 cents to $81.54, logging its fifth session of gains. Both benchmarks rallied more than $1 a barrel on Tuesday as the U.S. dollar slid after the prospects of further interest rate hikes eased following softer U.S. job data. U.S. crude stocks declined by about 11.5 million barrels in the week ended August the 25th, and that's according to American Petroleum Institute. The bigger-than-expected draw in U.S. crude oil stockpiles is positive for the oil market as it suggests a firm demand, according to analysts. At the same time, investors bought futures on concerns surrounding Hurricane Idalia, which is churning over the Gulf of Mexico to the east of major U.S. oil and natural gas production sites. For grain now, Chicago wheat prices inch higher on Wednesday, snapping a four-day run of declines after a survey showed a sharp fall in Canadian production that could curb global supplies. Soybean and corn prices stabilized after falling on Tuesday when U.S. government data showed that hot and dry weather had not damaged U.S. crops as much as thought. The most active wheat contract on the Chicago Board of Trade was up 0.2% at $6.01 for half a bushel. Soybeans lost 0.3% to $13.88 for three-quarters of a bushel. Corn added 0.3% to $4.88 for a quarter of a bushel. Wheat production in Canada fell by 14.2% in 2023 compared to 2022. That's according to statistics by Canada Survey, and due to lower than average precipitation and high temperatures. However, Chicago wheat prices are down nearly 10% this month, with the market well supplied by cheap Russian grain. Data show that soft wheat exports from the European Union in the 2023-2024 season fell to 4.49 million metric tons by August the 27th from 6.31 metric tons a year before. In the soybean market, prices were supported by the U.S. Department of Agriculture, confirming private sales of 246,100 tons of U.S. soybeans and 105,000 tons of U.S. soybean meal for shipment to unknown destinations in 2023-2024 marketing year. Cherry news now, we say congratulations to Dr. Juliet Ehumwa, who on her appointment to the board of Zenith Bank, one of Nigeria's leading financial institutions. Dr. Ehumwa gets on board with her extensive experience in technology. And according to Zenith Bank, her appointment reflects a strategic move on the part of Zenith Bank at a critical moment when African startups and hopefully now legacy institutions have begun to lead in driving the global evolution of fintech. Before now, she was West Africa Director at Google, where she was instrumental in driving innovation and growth across the region's tech ecosystem. Congratulations to her. While still talking about some powerful individuals, business magnate Mr. Tony Elumelu has applauded some of the economic decisions taken by President Bola Tinubu, saying that the private sector is encouraged by the decisions. Speaking after a meeting with the president at the presidential villa, the founder of the Tony Elumelu Foundation says he believes that with time, Nigerians will benefit from the decisions taken.
The private sector is encouraged with the bold decisions President Bola Tinubu has taken, and we hope that in the fullness of time, Nigerians will benefit from it, because it's all about Nigerian people. It's all about youth. It's all about making sure our women are involved and empowered. It's all about making sure our youth get jobs. And I think Mr. President has this at the back of his mind. And I believe, as a private sector person, that the actions and decisions the President is taking now, in the long run, will help our people.
What specific area?
A bit of patience, Rome was not built in a day, one day like.
Well, still watching Business Morning, we get to our first conversation of the day, and it's about taxes. Not a very pleasant one for a lot of businesses, but do remember that President Bola Tinubu had postponed the implementation of the 2022 Finance Act, and it begins on Friday, the 1st of September. Certain provisions were amended to begin on the 1st. I want to find out what these provisions are and how it will affect you as a business person or as an individual. So we have an expert, a tax expert, joining us virtually now to discuss this. Mr. Martins Aroge's partner, tax regulatory and people services decision, and also tax ESG lead with KPMG, joins us virtually from Lagos. Thank you so much for your time, Mr. Aroge. Good morning.
Hi, good morning. It's a pleasure joining you this morning.
Good to have you. So, going right into it, we know that VAT has had a lot of amendments in this Finance Act that comes into play from Friday. For instance, the VAT withheld or collected shall now be remitted on or before the 14th of a month. What does that mean? How does that change anything that has been in existence before now?
Okay, thank you very much. Yes, you are right in saying that one of the changes that were introduced or that would be introduced by the Finance Act, because we are still about 2 days away from the 1st of September, is that VAT deducted at source will now be remitted on the 14th rather than the 21st of the month, which was what typically happened. So what used to happen in the past was that there was the same timeline for remitting VAT. It didn't matter what the source of that VAT was, whether it was VAT that you charged and collected from your vendors, or whether it was VAT that you charged and collected from your customers, or whether it was VAT that you were charged by your vendors and that you then deducted as source because you have been appointed as an agent of the Federal Inland Revenue Service to deduct VAT at source. So they've just separated the timelines for remitting both forms of VAT. Going forward, the timeline for remitting VAT that you are charged by your vendor and which you then proceed to deduct instead of paying it over to your vendor, that will now be due on the 14th of every month, while the VAT that you then collect from customers, that you will then file and remit on the 21st of every month. It's all about trying to get in these revenues faster and quicker, and ensuring that government has access to money that they believe belongs to them a lot more quicker.
A lot more quicker, but you also have the issue of monitoring it. I guess that the regulator or FIRS will not expect this to start immediately. It's supposed to start from the 14th of September. There's supposed to be remittance on the 14th of September.
That's a very thorny issue. In the past, what we've always argued that tax laws should not be retroactive. And there is actually a judgment that tends to support that. And if you look at the national tax policy, one of the framework on which it was written is also supports the fact that the tax laws should never be applied retroactive. Now, if you say that the effective date is 1st of September, then the expectation is that only transactions that occur after the effective date should be impacted by the change in law. So if you are only going to consider transactions that occur after the 1st of September, what that means is that the first month in which you would expect a double set of returns should be October, and that the first set of those returns should be 14th of October. However, the tax authorities tend to apply it a bit differently and tend to see it a bit differently. So they've issued a public notice in which they've stated that from the 14th of September, they expect to see companies that are impacted by this change filing the first set of returns. What that means is that transactions that will be covered in the returns filed on the 14th of September would primarily be transactions that occurred in August, which is before the effective date of the Finance Act. So that's a contentious matter, but that's where we are in terms of what the tax authorities is currently demanding from taxpayers.
Yeah, but I guess they're also taking into consideration the fact that this was supposed to have started months ago. It was President Tinubu that moved it to the 1st of September, I believe.
Yeah, and when you were introducing it, you basically used the word postponement. That's not the word I would use for two basic reasons. The first one is that if you look at the Finance Act in itself, it does not clearly state an effective date. It says, or it provides some sort of leeway. It says any date that the president may decide by an act or order. So it gives the president the leeway to determine the effective date. What President Tinubu essentially did as soon as he settled in office was to then issue an order to state what that effective date would be, which is 1st of September. So I would not use the word postponement. I think the president used the provisions of the law as passed by the National Assembly and the powers that it conferred on him to set the effective date. Secondly, if you look at again, I would refer back to the national tax policy. It says that companies ought to be given the right to properly understand, study a change in law and make plans for the effective implementation. And the national tax policy suggests that a timeline of between 3 to 6 months is what they believe, or what it believes is an effective timeline between when a law is passed and when the effective date should be when it comes to tax laws and tax policies. Now, this law was passed or was assented to by the president, the outgoing president, on the 28th of May. So if you look at the timeline between then and 1st of September, that would be roughly around 3 months, which is primarily the minimum window provided for in the national tax policy. So I think that the president, all he was trying to do when he set the effective date as 1st September was to align it with what government has issued as its own tax policy. So yes, I wouldn't say it was postponed. I wouldn't say it was delayed. I would say that it was made to align with government's own policy as enshrined in the national tax policy, and it was within the powers conferred on the president in issuing that order.
All right. So another change is the exclusion of items, VAT on items from building. They said any fixture or structure that can be easily removed. What does that imply?
Okay. So what in the past, there was the definition of building that we had in the past tended to cover everything that was fixed to the ground. But we know that not everything that is fixed to the ground has a degree of permanence. It's possible that something may be fixed to the ground because that is how you need them to work at a particular point in time. However, I won't use the word minimal effort. With some effort, you can easily move those things to a different location at any point in time that you so desire. So what the law has tried to do is to say what we consider building are only fixtures that are fixed to the ground with a degree of permanence. They cannot be easily moved. So if you have a telecommunications mast, for example, even though it is fixed to the ground, we know that if you so desire, you can decommission it and move it to a different location at any point in time. So basically what the law has basically tried to do is clarify the definition of building and attach that degree of permanence as a classifier for what we qualify as building.
So what does it mean to the build industry or as an individual who is involved in building now? What does it mean to such a person?
It may not change much for those in construction, in actual building construction. Where it may have an impact will primarily most likely be in telecommunications. Because like I said, items such as the telecommunication mast that would ordinarily have qualified as buildings in the past and so would have been able to enjoy that exemption would no longer enjoy the exemption. So the cost of renting those mats, especially when you consider the state of the telecommunications industry today, where most of the telecoms providers typically rent or pay some service charge for use of co-location mats, as you have spread over most part of the country. So it would most likely drive up the cost for telecommunication service providers. That's why I think the major impact will be felt.
All right, then we have the Tertiary Education Tax went up from 2.5 to 3%. And here we thought that President Bola Tinubu would have a friendlier face. You know, we had thought, I mean, because there were a lot of criticism when this Finance Act was amended last year before its implementation. You know, they're supposed to start this year. A lot of businesses or stakeholders in the real sector are not happy with the changes because it means more for them, costs them more. And now we see that we're still stuck with the increases, especially in this case. I mean, among other things, even stricter taxes. How does it fit into his administration?
Now, it's difficult to say how it fits into the administration of the current president, given that this law was passed prior to his assumption of office. We need to be very clear that this law was assented to by President Muhammadu Buhari on the 28th of May. What all the current president has done so far is set an effective date for its implementation. So I'm not going to go into whether it fits into his overall policy on tax and business that are trying to grow business. But I do understand where companies are coming from when they say, especially when they say that this may be an additional burden that they can do without, given the tough operating conditions that we see currently for companies in the country. The rate was 2% a few years ago. So in the life of the President Muhammadu Buhari's administration, it was changed twice, first to 2.5% and now to 3%. And like I said, I do understand when companies say that this may be a bit too much for them, given the additional burden that they are having to face with the increase in operational costs and cost of doing business generally in the country. The corollary, the alternative argument to all of this would be to say that the education sector in Nigeria actually needs all of these resources in order to ensure that we are able to address the challenges we see in the sector in terms of infrastructure. So yes, there is an argument for and against the increase.
Yeah, well, some people will ask you if it actually gets to the education sector and we're experiencing strikes more months in the year than, you know, days when students are in class. So, I mean, there's so many arguments to that. But let me not take you through that. Let me not take you through that. But let me just ask. But let me ask, isn't it possible? Of course, we do know that it was assented to by the past president, the immediate past President Buhari. Isn't it possible for an amendment if President Bola Tinubu says he wants to encourage economic activities, he's even asked for a single-digit interest rate? You know, he's formed a committee to look into tax reforms. Isn't it possible for the Finance Act? Is it cast in stone? Can it not be amended?
The simple answer to that question is yes, it can be amended. And yes, you can change the law. The Finance Act is actually changing the law, so you can issue another Finance Act that changes or amends the law. If you look at, we've issued Finance Acts consecutively for a few years. I think the first one was the Finance Act of 2019. So we've done this annually for the last 4 or 5 years. So yes, we can change the law. But I think the bigger issue for me isn't about changing the law. It's about seeing what drove the change in the first place. What sort of studies did we do that necessitated that change in the first place? What are the impact and effect that we've seen from the change since it's been introduced? How does that tally with the studies that we did before we introduced the change? Because, and it's not just about the education tax or the Finance Act 2023. I think it's all about our holistic approach to taxation in Nigeria. What are we looking to drive? What sort of behavior, what sort of change are we looking to engender with every change that we introduce? And I think we ought to step back after we introduce this change and say, have we been successful with our initial objective? And what do we need to tweak to be able to get us back to that objective? It's something we should do with respect to all tax laws, not just the Tertiary Education Tax Act.
All right, thank you. Just before we let you go, I know before now, it used to be that businesses pay about 40% of their profit as tax. What is it now? Did you know?
The company's income tax rate in Nigeria for large...
No, I mean accumulation of all the taxes that they have to pay.
It's difficult to put a number because it changes from company to company. So what you can only put a number to is the baseline rates. In terms of what the effective rate will be for every company, there are a number of other considerations that you put into account. There are taxable expenses, non-taxable expenses, non-deductible expenses, taxable income, non-taxable income. So it's not something you can throw a number off the top of your head. It changes from company to company.
All right, thank you so much for this enlightenment, Mr. Martin Saroge, Partner Tax Regulatory and People Services Division with KPMG. I appreciate your perspective.
Thank you very much.
All right, not a friendly one, but it's something that has to be done. The government needs revenue. Just, the business operators are asking that they're also taken into consideration in this decision so that, after all, they create the engine for activity in the economy, so they need some kind of buffer. But that's it for that tax. Let's take a break now. When we come back, we do have other conversations for you. I'm sure you know that. Stay with us. Welcome back to Watching Business Morning here on Channels Television. Recently, we've seen a lot of activities around Transnational Corporation PLC. That's Transco. They have their energy, they have the hotels. We saw their financial result looking good. We talked about it some weeks ago right here on Business Morning. But today, I think we'll focus more on their energy. As we know, energy supply or electricity supply is a vital part of doing business in Nigeria. Gobs a lot of overhead costs for businesses, and so we do need solutions. Well, joining us for this conversation is Dr. Owen Omagiafo. She is the president and Group Chief Executive Officer of Transnational Corporation PLC, joins us virtually from Abuja. Thank you so much for your time, Dr. Omagiafo. And let's get right into it. We see that Transco has been really busy. You have your tourism, your hotels, but I think we're more interested in the energy at this time because that's a bigger need for the country.
Good morning. Thank you very much. Happy to be here with you today.
All right, so I was hoping you could bring us up to date on some of those acquisitions that you have done and the movement around your company.
Okay, so once again, I'm glad to be here. Like you said, energy is very important for the society, and we've seen there's been a lot of developments as it relates to how are things changing. So for us in Transco, our purpose is improving lives and transforming Africa. And we do recognize very strongly that to transform any society, you need to fix the energy space. You need to fix power. And earlier on, like 10 years ago, we first invested in our power generation business in Transco Power Ughelli. We consolidated further in 2020 with the acquisition of Afam Power Genco, which then took us to about 2,000 megawatts. But looking at the entire value chain, realized that the power still wasn't getting to the last mile. So when the opportunity came for the distribution companies, the new investment in distribution companies, it seemed it was the right thing to do. And working with other investors, that's what pushed us. So that was the motivation for us to go with other investors to take the stake in Abuja Electricity Distribution Company that we have just done, noting that distribution company is very, very critical and a strong part of getting the power to the last mile users, getting the power in a safe, reliable, accessible manner all the way to the end. And that's what's guiding us right now as we continue to push on our principle of Afro-capitalism. Thank you.
Yeah. So now that you are in the distribution area, there are so many challenges. I wonder what you're going to do differently. We've been talking for years about getting meters to consumers to make billing, easier and collection also more accountable. But it seems that's a big issue. Even with MAPS, the program by the president, it doesn't seem like it's moved very fast.
Change does take time, and this is the reality. A lot of times we talk about the challenges in distribution, and you've asked what are we going to do different. The reality is that even in our generation, there are challenges that we worked on, focusing on the disciplined approach that we have towards transformation. We are private sector, and we bring in that private sector discipline, that private sector rigor, the far-sightedness. So what are we going to do different? We're going to take a holistic view of what are the challenges within the sector. It goes beyond just the metering. We have a customer enumeration exercise that needs to take place. Nigeria needs a strong identification database where we are able to connect people, individuals to their houses, individuals to their meters, follow through on the power. The level of energy theft in our country is still too high. The level of energy losses that's arising from obsolete equipment, they are still high. And of course, the collection system that we have, yes, to some extent, we now have some more automation, but there is still some manual systems. And what we will work on is work on using both technology as well as the sociological infrastructure that exists within Nigeria to see how we're going to drive our collection, how we're going to drive the metering, how we're going to drive customer satisfaction, customer engagement, because in everything that we're doing here, ultimately, the customer is king. And that is what we're looking for, because when you're able to create value for the customer, they will work with you hand in hand towards progress.
So now we have the Electricity Act that empowers states to generate, distribute electricity and all of that. Where do you fit into that?
Let me first start by saying that it's a welcome development, right? It's a welcome development because we need to have a lot more happening at the state level. There's quite a bit that is situated at the federal, but the people are at the local governments, they are down all the way into the state. So we are glad about this development because it's going to allow states to be able to take charge more of their faith as it relates to power generation. So for us in Transco, where do we fit into that? We fit as a preferred partner, just like we've partnered with the federal government in the past 10 years in the power sector. This is how we are also going to make ourselves available. Today, we actually have 2 generating companies, one in Delta State and one in Rivers State. In both plants, we have the capacity. So you've talked about our results. Transco has been in the news. But it interests you to know that we could actually have generated more than even what we did in the first half of the year if we had gas and the right infrastructure to be able to evacuate our power. So now that the states are very involved, we've seen states that were leaders even before this, before the Electricity Act. We saw Edo State, Lagos State, Ondo State, Kaduna taking charge to see how do we solve the power situation in our state. And of course, when you solve the power situation, you will attract investment. It is a natural order of things. Any state that is able to provide access to power, improve security, reduce any barriers to investment, will find that there will be investments will follow. And for us at Transco, we have the pedigree, we have the track record, and that is what we're going to be offering with the working with the state to say, look, we know what we're doing. This thing requires patience, it requires funding, and we're here with you as a trusted partner.
All right, we hope you spread your tentacles to many states, not just the Federal Capital Territory, and all of that. But thank you so much for sharing the Transco perspective and vision with us this morning. Dr. Owen Omagefor, President and Group Chief Executive Officer of Transnational Corporation, PLC.
Thank you. It's been a pleasure.
It's AFX time after this break. We go to the markets now, starting with FX markets, and we can tell you that in the last trading week, we saw mostly negative. That's a flip from what we had last week. Negative performances across key indicators. Turnover fell. Looking at the details of it, the fell by 73.49%, closing the week at 4.49 billion naira from, imagine what it went from, 16.54 billion naira. It was a really negative movement compared to last week. Volumes also fell by 76.64%. Number of deals traded also fell. Do we call this profit taking? 5.97 to close at 189 from 201. That's what we had this time last week. The FX commodity index witnessed a decline of 1.61%, while the FX exports index maintained 229.25. The volume of contracts traded, let's look at that now. We did not witness an increase in volume across commodities, and it was mostly unchanged when it comes to the volume of contracts for the week ended August the 28th. Let's go over to the prices now of the commodities and see how that looks for the week in view, starting with cashew nuts, a green there, 2.15% increase. That translates to about 11 naira 34 kobo, 539 naira 25 kobo for cashew nut. And that's for every kilogram. That's it. So if you invested there, you'd have gotten that. And in soybeans, you would have gained 6 naira 33 kobo. That's 1.74%. It closed at 370 naira 28 kobo. Looking at paddy rice there, not a good one to have invested in between last week and today, because it lost 2.10%. That's 9 naira 55 kobo. Closed at 444 naira 52 kobo for a kilogram. Maize follows that group, another loss, 5.54%. A whole 25 naira off the price in 1 week. It's a good time for consumers, I guess. 427 naira 33 kobo for a kilogram of maize at the end of the week, August 28th. Now, these are the crops that have been stable for investor or consumer. Price of sesame has remained unchanged in the week, closed at 1,247 naira 57 kobo. Also, cocoa has remained unchanged. This is like a second consecutive week we've had cocoa, 1,906 naira 10 kobo unchanged. Ginger also. These are some of those industrial crops that could be processed. And wheat, unchanged also. Russia and Ukraine, I'm sure they do have a hand in this. 440 naira for a kilogram. Sorghum unchanged also at 300 naira for a kilogram. And as FX personnel will always say, you can get to their website, follow them on their social media to get more information. And talking about FX personnel, we do have one of them joining us from our Abuja studio to talk about a move they just had. We have Taiwo Williams, Corporate Partnerships Associate with AFEX. Hi, Taiwo, good morning.
Hi, good morning. Thank you very much for having me.
Oh, good to have you. Well, first I have to say congratulations on that MOU you signed with the Ghana Exchange, Commodities Exchange. That's a bold move. And I know you represent Nigeria, but what do you hope to achieve from signing that MOU?
Again, thank you very much for the congratulations. We are very happy to be able to partner with an organization like the Ghana Commodities Exchange. You know, AFEX creates infrastructure that supports the Africa Commodity Exchange in three major ways. By providing capital through the AFEX Finance, through the AFEX Investment Limited. Through this, we see to trade finance, we see to deal structuring, and we also create wealth management. The second way we do that is by creation of markets. Now, through the AFEX Commodities Exchange Limited, AFEX has created risk management. We've also created a structured trade, and we also allow for contract listing on our various trading platforms. But also, the final way we do this is by creating infrastructure. And in the AFEX Fair Trade Limited, we ensure that storage and aggregation services, farmer productivity, but also trade execution is ensured. Now, in order to be able to achieve this, and at the heart of AFEX's mission is helping Africa feed itself by creating structure around intra-Africa trade. And we cannot achieve this without reaching across the border every now and then to find partners that can help us make this happen. And in order to do this, in comes Ghana Commodities Exchange. Now, this is a licensed trading platform in Ghana that's created like a marketplace, right? An integrated marketplace where buyers, sellers, investors can play equitably on a transparent and well-executed marketplace. And their goal, which they pursue tirelessly, is to ensure that all of these players, especially the traders and farmers, get access to finance, they get access to market, and then most importantly, get access to information. And so we were able to broker this relationship and create this in order to create structures that can amplify and uplift the agriculture and commodities trading space in Nigeria and Ghana, but also in Africa as a whole. And subsequently, I'll be describing the elements of that relationship, but we also aim to, to grow aggregation, to grow the capacity of farmer productivity, and also to solve for the major problem of liquidity in the market.
Yeah, please go ahead and describe it, because I'm kind of curious to find out how it works. Are we going to have farmers in Nigeria? They can, have their crops there. You're going to be the connecting factor. Just, paint the picture for us.
So as I described earlier, AFEX has these three major arms in which we use to ensure that commodities are readily available, that there's an equitable marketplace for them to be traded, and there's an infrastructure that backs it. And there are two major pillars of the relationship between AFEX and the Ghana Commodities Exchange. The first one is where we'll be collaborating on trading. Now, on this, we'll be collaborating on the trading standards and trading infrastructure. Primarily, we'll be looking to cross-list commodities across both trading platforms. We'll also be looking to solve for the problem of liquidity. So we're amplifying liquidity in the market, because we know that illiquidity really hampers the smallholder farmers. It makes them unable to, cater for their working capital. And we know this affects production, and eventually it will affect the market as a whole, because it is kind of like a domino effect. The second way we look to ensure that this relationship works is by collaborating on information exchange. This would see us have joint research exercises, joint data collection, and also joint capacity building exercises with both organizations. And in order to be able to achieve this, we also look to technical assistance for warehouse management, for aggregation services, extension services, and not necessarily we will not really have farmers coming and going, but we ourselves would ensure that where there is a lack in capacity in different countries, for example, in different agricultural practices that we have seen to work here with our farmers in AFEX, we step in and we provide that capacity building exercise. We connect these farmers to infrastructure that helps them to scale up and, not necessarily remain smallholder farmers forever.
So in the coming months, what can we expect? Is the deal sealed? Is everything set? Can we expect, some activities real soon?
Yes, so the stage is completely set. We were very, we had the immense pleasure of having the team, Ghana Commodities Exchange team, in our office here in Abuja, the AFEX headquarters, on a 2-day visit. And included in that visit, we kicked off this information exchange I mentioned. We had multiple sessions in our offices where we were able to break down different elements of our business models for both organizations, actually, and how we've been able to scale up in different aspects. We've been able to become slimmer, to be able to achieve an effective commodities ecosystem. Included in that trip was also a field visit to our 100,000 metric ton storage facility in Kwali here in Abuja, where we were able to also depict a lot of these operations that we were speaking about. So as we have started this process of information sharing, in the next few months, we hope to kick off every other aspect of the relationship, as I mentioned. Cross-listing commodities, building extension services around a lot of these farmers, warehouse management, cross-trading of e-warehouse receipts, which currently both organizations do, and also exploring other areas outside of what we have mentioned. But key to that is AFEX's Pan-African expansion, which we has seen us build entities in Kenya, entities in Uganda, and we're expanding to other multiple African nations across over the next decade. And we believe that organizations like the Ghana Commodities Exchange will be very instrumental for us to be able to achieve that Pan-African expansion, but also achieve the main dream of helping Africa feed itself by building and facilitating and strengthening intra-Africa trading.
All right, thank you so much for that. And we hope to follow you in your growth and expansion. And eventually we can say boldly that Africa has food security. That would be a celebration for all of us, not just for AFEX. Even though we know you'll be making the money. But thank you so much, Taiwo Williams, Corporate Partnership Association with AFEX, for your time this morning.
Thank you for having me.
Let's take a moment. We'll be back. We're still in the markets, and now we head to the money market with Will Ibong. Comes in green. I hope the market is as green as your shirt.
The market is flying in the green. I just want to use the expression that the NGX
is that why you have
it's
green
in a frenzy. Yes, so I need to represent. I just had to come in the green in it. Just
to capture the sentiment in the market.
I need to be, this is more a spirit of solidarity.
Okay.
You just need to be in the
spirit.
I'll
do that tomorrow.
Please do that tomorrow so that the market continues in the green.
In the green. All right.
So we're going to kick off with the fixed income market. We did see that improvement in the bond space yesterday. Pockets of demand across board. We saw demand for the short end for the 2029-2026 paper. On the long end, we saw improved demand also for the 2053 paper, and this was around the 14% handles, while this one was around the 15.85% handles. We saw offers also for the 2038 maturities right there on the screen. So we're seeing that improvement for the bond market. So if you look at the NTB, that's the Treasury bills market, we did see a bit of I say quiet trading, but more volume there yesterday compared to what we saw on Monday. But we're going to bring in Bankole Odusoya, is the chief dealer fixed income at Polaris Bank Limited, to share his insights on what happened yesterday for the week and what to expect. Good morning, Bankole. It's good to have you on the program.
Good morning.
So we're seeing this improved, I think it's buy interest or sell interest, sell off to the market. But what is liquidity like in the market right now? We know FAC disbursements was supposed to hit the system as of Monday. What is it like for the markets in terms of liquidity and how traders trading ahead of the NTB auction next week?
Okay, thank you. System liquidity is currently at about 350 billion. It actually started the week when federal allocations came in just about 660, but we were in a negative situation. So the impact of the federal allocations has only even been felt at the shortened end of the market, which is the overnight market, where banks exchange funds amongst themselves. So the rates were as high as 25%. It's now dropped to 5%. For the Treasury bills, we are beginning to see more activities because the yields are quite high, especially on Treasury bills 1 year, and the 2028 and the 2029 FGN bonds. So basically, prices have dropped on those instruments because most traders, dealers, and brokers sold up to take profit and to raise some cash because of the liquidity, system illiquidity, which we experienced from about August 11th till Monday. So going into next week, there's another NTB auction where we expect the liquid system to drag down the stop rate for the 1 year just marginally. The last NTB stopped at 13.8. We expect that with the kind of liquidity we have in the system, the stop rates could drop to as low as 12.5 or even 13. We do not expect another 14% stop rate from the 1 year because of the liquid system. Going into September, behind the NTB auction, we expect inflation figures to be released mid-month in September, and by 1 week after that, we expect the Monetary Policy Committee to meet. The expectation is that inflation will continue to tip up, and then yields could, in the market, also tag along. So that's why we're seeing some inactivity, especially on the medium to long end of the market. There's caution around inflation. There's caution around expected interest rates in general and what the Monetary Policy Committee is likely to do. So there's more activity on the short end, term deposit, overnight market, and the Treasury bill short instrument. So basically, that's the wrap of what has happened the last 2 weeks and going into the month of October. Those are the expectations. The Monetary Policy Committee meeting, the inflation figures coming out in the middle of the for Nigerian Treasury bills. One to be held on the 6th, another one will be on the 20th of September.
So you just mentioned some of the drivers, some of the factors we should look ahead, for that would influence activities in the fixed income market. And you take into consideration the activities in the NGX at the equities market. Right now, it has hit a 15-year high, and we're seeing the all-share index at a point as in crossing 29% and going further up. Do you see this impacting trading in the fixed income space? And also, do you see investors probably changing, because a lot of portfolio rebalancing are happening at the moment, reallocations of funds are taking place. How do you see this impacting all future auctions in the fixed income market?
So the inactivity we're experiencing in the long end of the fixed income market simply means that most fund holders are playing on the equity side, especially on stocks of institutions who have receivables, like banks and companies who do export proceeds. Those ones earn in foreign exchange, and then so it seems as if yields are expected to go up high. Why do I want to lock in long on instruments at 14 and 15 when yields could go as high as 16 and 17, where prices will drop further? That's on the fixed income end. So we're seeing more diversification of portfolios to equities currently on specific stocks of companies who have export proceeds by way of dividends. And I mean, a lot of Nigerian banks are now on the continent and they receive foreign exchange dividends and all that. So that informs specific choice of fund holders doing more business on the equity space compared to the fixed income long-term securities end of the market.
Thank you so much, Mr. Bankole Odusoya. I would look out to how the market closes today. We hope that we continue on this high, especially for the equities market and fixed income market as well, rolling off and rubbing off, taking off of that positive sentiment from the market, and see investors do not just sell off a lot, but remain in the fixed income space. At least it's a safe haven. Thank you so much, Mr. Bankole Odusoya, Chief Dealer, Fixed Income, Polaris Bank. So, Ini, I'm still in the euphoria of the market. Yeah. Fixed income is not doing badly as well, but the equities market, I think, is the place to be right now, Ini. Yeah, well, so put on your green, don that green attire tomorrow, and let us just continue this.
All right, I'll get home after this, change to green for the stock market.
Yeah, that would be perfect.
All right, well, Ladi Williams comes in, not in green, but I think maybe with two back-to-back now, I don't see any green. But no green. I see your market is in green, so...
But I come with green news at this point. And you did say something yesterday. You said there's a possibility I brought the green back into the market. That you're a
market mover.
Yeah, so...
Well, we have to observe for 1 year before we can...
1 year. Really long time. Really long time. Let's look at the fear greed index there. We're seeing 42 points now, back to neutral after being in fear yesterday. Let's look at the top cryptocurrency we track now. We see Bitcoin there. Big jump. Yesterday, it did jump about 7%. After that big news, we got from the US, $27,390. This is what we're seeing for Bitcoin. We see major cryptocurrencies dropped as the US court sided with Grayscale in a lawsuit against the US Securities and Exchange Commission, which had denied the company's application to convert Grayscale Bitcoin Trust to an ETF. Analysts say the decision could impact other companies that want to create Bitcoin ETFs like BlackRock, Fidelity. Let's bring in Michael Naji now, financial market analyst. Hello, Michael. Great to have you.
Good morning, Ladi. Thanks for having me on.
So, yeah, big news yesterday, and we see Bitcoin and major cryptocurrencies. They reacted to that news there with the big win for Grayscale. What does this really mean for the crypto market? We've seen a big jump, but is this sustainable?
Yeah, so we saw the appellate court out of DC come against the Grayscale, come against the SEC in the Grayscale case. They found that the case, the SEC was being abusive and capricious in regards to how they were treating this case. Basically, they found that the futures product is no different than the spot product. There's basically a 99% correlation between the price of the two, where the one is derived from the other. So basically, the court sides with Grayscale in regards to their arguments of basically we have a good product and we just want to convert it into a ETF wrapper, and there's no reason for them to be blocked. However, though, with this approval, with this decision, it doesn't mean the ETF gets approved automatically. Basically, all it means is the court is basically disagreeing with what the SEC is saying. But however, the facts that the SEC brought across, which is basically concerns about manipulation, are still valid, because a lot of Bitcoin trading happens on exchanges that are outside the U.S. regulatory regime. So these are a couple things to think about. Right. It's not an automatic approval, but it does set the odds and probability way higher than it was yesterday from this decision. All right. But this is good news. It's going to be hopefully a catalyst moving forward for us to go higher. But in regards to some clarity and with this and the Ripple case, things are starting to look bright for crypto, and it's looking to be the beginning of the end.
Quite a dramatic turn there. And talking about manipulation now, Michael, very quickly now, we saw that yesterday, Wales accumulated about $338 billion of Bitcoin before the ruling. Is this some kind of manipulation? Yeah, did they have information before now?
Of course, information for different classes of people travel at different speeds. So there is some credence to whether or not this ruling might have leaked out before the public was aware of it. There's several layers, and we have to remember that DC is a very complicated place. So yeah, there's a possibility that this ruling could have gone out before and people acted on this information who were privy to it because of the nature of Bitcoin.
All right, well, we'll keep watching to see if this bullish run continues on this news. Thank you so much, Michael Inaji, financial market analyst. Thank you.
Thank you, Letty. Have a great morning.
Thank you. You too. All right, see now, we see Bitcoin Cash topping the counter there for top gain. It's got 14.96%, and major cryptocurrencies all jumping because of that news we got yesterday. STX, EOS, not left out, 9.39%. Let's look at the top losers counter now. See who's topping that counter. ASTR, 3.67% down. DYDX, $2.15 down, 0.28%. So, yeah, that's how the market is looking. Quite bullish today. Quite a dramatic turn of events.
Very, very dramatic, unexpected for me at least.
Quite unexpected, but you said it. I brought the green, and maybe I did.
I'll remind you.
Right.
All right, Laddie, thank you so much.
Thank you.
Well, that's it on the program today. Thank you so much for being a part of this 55 minutes of current and relevant business conversations. We'll have another one tomorrow, God willing. We'll be here to give you fresh conversations. Will Ibon will be back at 1:30 to give you update from the world of business. I'm Ini John Rekwado. Join me at 10 p.m. for the stock market report. I'll bring the bull, I promise.